Good evening, everybody. Hope everybody's having a nice summer evening. We're still up here at the lake. But we've got the great pleasure of having Oliver Schmalholz with us tonight. He's got some very interesting indicators that allow him to project when there's going to be a change of price movement. So I'm not going to take away any more from him. Oliver, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Steve, thanks a lot for the invitation. I'm really excited to be here and appreciate the introduction. So I'm going to dive straight into the content here. We're going to talk about how we can scientifically predict stock moves, and you can use that to your advantage in your own account, just like the big hedge funds do. And there's three components in there. There's a C, a P, and R. That's why we call it the CPR strategy. The C stands for the clarity. That's the complete clarity for your dollars. The P stands for profits. Darn, that was fast. Rapid profits. And then the R, very important, stands for the risk management, the proper risk management. My name is Oliver Schmalholz. I'm the co-founder and CEO of News Quantified. And before we dive into the content, just got to go over those disclaimers here. Want everybody to understand that News Quantified is not an investment advisor service. We're also not a registered investment advisor or broker-dealer. What we are is we are a research firm that analyzes the impact of news and other events on U.S. equities, and we make that research available to our subscribers. And when it comes to trading, always remember only trade risk capital. With that being said, a little bit about my background. You might hear it from my accent. I'm from Germany. Was born and raised in Bavaria, just an hour south of Munich, the home of the Great Oktoberfest. And I'm a serial entrepreneur. I love solving problems and building new companies. And now live in Scottsdale, Arizona. We're in the middle of the monsoon season, so back to double-digit temperatures after we had quite some heat in the 115, 117 range. And I got started, my first big entrepreneurial success was in the telecoms industry. I had the great pleasure when the European market deregulated to get the first long-distance license over in Austria, built up a sizable business, and then sold it to a large publicly traded company. And that's what really allowed me to invest some money in the market. And I've always been fascinated with the biggest market in the world, the U.S. markets. And part of my track record that I'm going to go over in the next 60 minutes is how I generated 100,000 in 30 minutes with a diversified portfolio, multiple triple-digit % annual returns, even during one of the worst financial crises in U.S. history. Seven-figure return is all backed up by a copy of the tax return. I love to travel. I'm a foodie. Here are a couple pictures with my family. That's with my wife in South Africa at the Southern Cape. We love cruising, so that's during a Mediterranean cruise in Greece. That one down below with our daughter in the U.S. Virgin Islands, St. Thomas. That one here on the top right was a really fun trip in Thailand at the Tiger Temple, 2 hours north of Bangkok. And then below at the Victoria Peak in Hong Kong. And the great things is that during all those trips, I've been able to put on trades and live the laptop lifestyle, been to 59 countries so far. I want to get up to 100 countries in the next 20 years or so. A little bit about who is News Quantified. That was funded in 2012. After I traded a news-driven approach from 2005 to 2012 and developed the whole approach, built the software, so I was an actual practitioner, putting on real money trades, tens of thousands of trades over the years. And then in 2012, started licensing the data into the institutional market to hedge funds and analysts. And what we do is we look at news events and we filter out all the noise and find those relevant events that move the markets. So first it was made available for big funds. Then we also started a second business line. We found out that public companies actually want to understand better how news impacts their own stock and how it compares to peers. And it's the same underlying data, just packaged differently. And then the third business line is we make the very same data available for the retail investor base, just in a much easier to understand way. And that's what the session today is all about. A couple of professional pictures here. I'm an introvert, hate public speaking, but Franklin Templeton convinced me to speak at their conference in Florida. The cool thing was that I had all fund managers sitting in the room with a total assets under management of over $1 trillion. Was really great to interact with that audience. Here I'm on a panel in Las Vegas at another conference, and you might recognize him. Yeah, it's Steve Wozniak, the other Apple co-founder. He was on Scottsdale, Arizona not too long ago, and was great chatting with him about the future of technology. Let's jump into the mainstream media, and I'm sure you've heard about articles like the first one here, the next generation of hedge fund starts data crunching machines. That was in the New York Times. The one here, the quants meet the new kings of Wall Street. That was in the Wall Street Journal. How machines and their masters are rewiring the investment world. And then quants are eating away at Wall Street's edge, that is Bloomberg. Wall Street Journal really summed it up right in their The Quants Run Wall Street Now article. The two key sentences in there: for decades, investors imagined a time when data-driven traders would dominate financial markets. That day has arrived. So ladies and gentlemen, while I was one of the early adopters back in the mid-2000s, it has now gone mainstream. And if you don't utilize a data-driven approach currently, you should really pay attention to this presentation, because that's really what the future is about. Let's start out with the definition. What is a quant? Quant uses computers to tell them what to buy and sell. So no discretional trading here. It's all backed up by clear rules when to get in and when to get out. And Wall Street are hiring a large number of quants right now, and quant is a person who analyzes a situation or event, especially in the financial markets, by means of complex mathematical and statistical modeling. That's really what it's all about, is taking all the information that's available and then translate that into an easy to understand decision. So no worries, you don't have to become a master in mathematics or statistics. We do all the work for you. As an investor, you might be asking yourself, what is your risk tolerance? What is your investment objective? We all want to make a lot of money, but there's a lot of different things to consider. And when it comes to this approach, can you really afford not to utilize it? So ask yourself throughout this presentation, what happens if you don't future-proof your portfolio? Then when it comes to hold times, what is your time horizon? And the great thing is this data-driven, news-driven approach works for all hold times, anything from intraday to swing trading, position trading, and now it goes to some actual examples. What are the goals I want to achieve during that time? What is my potential upside if I apply the strategy to my account? And since it's a quantified approach, you know how much on average it has returned in historic similar situations. And this is all about history repeating itself over and over and over. The same kind of setups that worked 10 years ago still work in the market today. Hasn't fundamentally changed. And can I apply leverage through margin, or can I trade options if you want to supersize your returns? How much downside am I exposed to? And then can I, for example, use this just as a directional approach, or could you also use it as a market neutral strategy, being long and short at the same time and really not care what the market is doing? And how diversified am I? Can I check signals from my smartphone so you're not glued to a computer the whole day? And can I enter trades on my laptop, phone, or iPad? Then next, about data-driven investing itself. What's data-driven investing, and do you really need it for your portfolio? I'm sure you heard about the terms big data, artificial intelligence, also called AI, bots, machine learning, natural language processing, quantitative data. It's all this shift we're seeing from humans having made decisions to an automated way. We live in this world where information flows 24/7, and the information flow never stops. So why not use the help of computers to really find the valuable information that can mean profits in your own account? There's absolutely nothing more important than finding out exactly what's going on in the world around you. And you might be asking yourself, so what kind of data is Oliver talking about? And we looked at millions of historic events that trigger stock moves, over 12 million in our historic database, and we found that it's news events, SEC filings, earnings reports, analyst actions, and market rumors that can trigger huge moves. At the same time, 97% of news is irrelevant, so you've got to find the 3% that's really relevant. Also, you need to look at the full market coverage from multiple news sources, so just using one source is not enough. The historical data shows how similar events performed in the past, and that's not just from a direction point of view, but also from a price performance and volume impact point of view. The higher the volume impact, the more powerful the move typically is. That direct correlation. And then you can use predictive power utilizing the latest in machine learning in artificial intelligence, and that of course runs on the latest hardware, so super fast machines. And on average, when the market is open, our machines crunch 1 million data points per second. So pretty powerful stuff. Switching into the academic world, we recently had 4 universities look if it's possible to predict stock moves feeding in news data. And the 4 universities, NYU, Rutgers in New Jersey, UC Berkeley in California, and to make it international, the University in Tel Aviv created this academic study. We provided 10 years of historic data. Dr. Joshua Lifnat, who also happens to be the head of research at a $100 billion quantitative fund in the New York area, said after he completed the study, News Quantified's data helped researchers determine that news releases can help predict market performance, not just in the following main trading session, but throughout the subsequent quarter. And the research was so powerful that it was picked up by the Journal of Investing, Volume 27, Issue 1. That's the spring 2018 edition. So if anybody wants to read that, just pick up Volume 27, Issue 1. And we recently had Professor Lifnat at an event being a guest speaker. And here are the key summary points. So the study focused on earnings announcements during the extended hours, roughly equally distributed between the after hours and pre-sessions. That's when most of the earnings are released. And the returns in the extended hour reflects the market reaction to the earnings surprise. So if it's good results, stock typically goes up. But then more importantly, the return in the extended hours. So good results, stock moves up in the pre and after hour session, and then that's predictive of the return in the main session, surpassing the earnings surprise. And then, even more important, the return in the extended hours is predictive of a longer return drift, incremental to the earnings surprise. So what does that mean? If you turn that into an actual strategy to buy and sell stocks, he did a very, very simple simulation, only once a month. You enter the strongest companies that had the biggest earnings, and you short the ones that were the weakest. And why did you do that? There's a common misconception out there that you've got to be a high-frequency trader to take advantage of this. So by giving you the whole month to figure things out and then enter a basket of trades, both on the long and short side, you're able to outperform the S&P 500 significantly. So that's the 10-year study here. The combined hedge was 140%, that strategy, versus 62% on the S&P. So the outperformance is 2.25 times. That's more than double the return of buying spiders and just being in the S&P 500. And that includes the nasty time in 2008. It's a really powerful way, and you don't have to be a high-frequency trader. You got all month to put together the list of portfolio, the stocks that are included. Let's jump into the three things that you need to know. The C for the clarity. So how do you ethically copy Wall Street's $4.5 billion profit machine without being a Harvard statistician? You need the right news events that trigger stock moves. There's two kinds of news events. Scheduled events where you know the date, the time, and the symbol, but you don't know the outcome yet. The most famous example for that is earnings. There's also dividends, annual meetings, and so on. But then you also have unscheduled news events where you don't know when they happen, what symbol for, and you don't know the time or the result. And a couple examples for that: analyst actions, such upgrades and downgrades, market rumors, Reg FD disclosures, product announcements. And if you look at the three trading sessions, while we have the biggest volume where most of the transactions happen is during the main market between 9:30 and 4 p.m., most of the news happen during the pre-market and during the after hours. And what you need to analyze there is the event type, the direction, if it's long or short, what is the holding period, and when do I enter, and when do I exit. And all those five top earners from the 2017 rich list of the world's top earning hedge fund managers all use this data-driven approach. So what data sources do you need to make this work? Number one, you need all the news wires. That's the Business Wire, PR Newswire, Global Newswire. Number two, you need the SEC EDGAR feed. Then you need the analyst actions. You need to understand the sell side. Then Goldman and JP Morgan. There's over 500 analysts we look at what they do. You need to do a media monitoring. We analyzed millions of web sources that are out there and narrowed it down to the 50 that make all the difference. And then there's also a couple of great financial publishers like Fly on the Wall and Benzinga that we actively monitor. No single source covers it all, and no single source is always the fastest. So it's very important to bring it in from multiple sources, even though it's adding a lot of cost, but that's what all the quants do. And you might be asking yourself, can I get all this information from the internet? The answer is no, you can't just go on Yahoo Finance or Amazon Money or MarketWatch. It's not always timely, it's not complete, there's no predictive data, and there are no historic measurements. So we close that gap by really covering all the sources. Number two, once you know what kind of events move the markets, how do you then turn that into rapid profits? And it's as short as 10 minutes to look at some data and then put on the trades. Here's what I had to go through when I got started back in 2005. I had to first buy the data, and I pretty quickly realized not all the news comes out at the beginning of the day. So to do it right, you need to buy tick data, pretty expensive. You need to subscribe to the data feeds. Then I had to find a programmer that understands the financial markets. I had to train the programmer. I had to put together the specification, wait for him to be finished with the coding. I had to test the stuff, do historic testing, look at multiple hold times, do a statistical review, and then buy the latest hardware. I spent almost $250,000 on that before I put the first trade on. But it's a lot easier now that all this groundwork is done. There's training you can access, there's software you can access, a news analytics dashboard, and there's signals and alerts that notify you at the exact time when you want. And so the way to profit from those kind of events is through a piece of software created, and I'll show you now some examples. So this is how it looked this morning. I took a screenshot here. Now the markets are closed, so we can't go into any live demo, but I took some examples here from today. So let me just switch the screen sharing here, and you should see my browser here. And so we go through thousands of news events, 5,810 today. And let me show you what the 3 long signals and the top 3 short signals did today. So the first one here that popped up at the very top on our list, and I had it ranked by historic opportunity, that produced a 4.16% return today. So the event comes out and then stock moves up. It was all the way up 5.84%. And you see here that that's one of the most important numbers here, that volume ratio here on top, 674%. What that means is, compared to the 5 days prior, it generated over 6 times more volume than usual. So pretty powerful move, 4% in a matter of a couple hours here, less than 5 hours into the close if you traded that. Then the second one here, so you can see I don't just show you winners. That was actually a 2% loser here. And if you look at the volume ratio again here, 112.59%. Typically, when you don't see at least double the usual volume, or at least 150 to 200%, there's no market follow through, and on those trades, it can make sense to exit them earlier because there's no follow through. So why deploy your capital in something that doesn't move? Then the third one here, 1.67%. And that happened at 9:21 here. Also, small volume, not even 100%. So small move. But let's look at the short side here with a couple of really juicy short setups today. The first one here, IVC, that came out at 9:30 this morning, down almost 4% here on more than double the volume. Again, the typical, setup process. A news event happens, it shows up on the signals page, and you're then able to take a position. If you got in here 40 minutes late, you would have gotten in at $16, and if you held it until the end of the day, $15.85. You don't have to get in a fraction of a second here and be a high frequency trader. Then CDE, another short setup that went down 2.2% on 1.5 times the usual volume. Came out in the pre-market 6:02 in the morning. You see here 5.9 million shares, so very, very tradable, even with a bigger trade size. And really, you got an advantage here. So you're competing with the big funds here that use this approach. And you might think this is a disadvantage, but really turn that into an advantage because you're able to deploy your capital a lot quicker. If a multi-billion-dollar fund wants to put 50 or 100 million into that position, they can push a button and enter 50 million with one click. They got to scale in over multiple days, and that'll continue the move into the same direction they want to enter. And you can ride this wave while the big guys get in with a smaller trade size and take advantage of that. And then LABL, that's the third short example from today. That came out actually yesterday at 8:32 p.m. So the after-hour session was already closed. So you could have gotten in the pre-market session or at the market open today. That went down $4.80, 7.52%. Again, the same process here. A news event happens, and then stock keeps going down. Let's look at a couple earnings examples here. There's an earnings setup we have, and we have extensive earnings data covering tens of thousands of earnings events, so you have access to all those great analytics. AMD, a household name, chip manufacturer, had earnings on the 25th of July at 4:41 p.m. and stock since then is up 24.32%. So even if you would have waited until the next market open at 9:30, you were trading at $17.15. You're now at $19.27, so quite a nice jump, and it doesn't require you to get in right away. Then Bank of America had a nice 4.67% move on the initial day on double the volume, and has been going up here to a peak here on the 8th of August. And combining this, with all the great candlestick work Steve has done, it can be very powerful for you to use the candlesticks as an entry at exit overlaid with this great news-driven approach. And then if you're curious, what happened in the Apple example, we know they're a $1 trillion company now. Stock is up $20 since the earnings. And again here, if you would have waited until the market open here, it's the perfect example, just like in Professor Lifnat's academic study here. We had right around the open here under $200, $199.15. We're up almost $14 since then. So exactly what the academic study describes. You got this event, goes up in the after hours, continues going up in the pre-hours, goes up, and guess what? The momentum continues here. Now, what about the short side of things in the earnings examples here? And Facebook had some pretty bad earnings here. The future doesn't look all that bright. Stock is down 20% since then. Huge volume. And you can see here went down pretty fast. The downside, typically, things crash faster than they go up. Or then here, Ford Motor Company, symbol F, 3.7% on the initial day, then 7% since then. So all household names, General Motors here, down 6.23% on the initial day, another 3.3% since then. So you see what Professor Lifnat described here in his study. It happens over and over and over. History repeats itself. Now, are all the examples like that? No. For example, here in the case of SNAP, SNAP, it had an additional very fast run-up here, a overreaction up 13.65%. If you would have looked at our return matrix data to see what a typical reaction is, you would have seen this was an overreaction. So if you trade candlesticks, you could trade the reversion to the mean here, and that has since then crashed 20% off of the overreaction. So you can't just trade the initial trend setup. If you see those overreactions and the trend doesn't continue, use your candlestick setups to benefit from the reversion to the mean. And then sometimes you see a quick spike here and then a sideways movement. That's situations when we just, when it's best to, you capture some initial profits, take profit, and then, just move on to the next opportunity. No reason to stay in a trade like this. So that's a couple examples here, both, for intraday traders that like to, day trade, and then for longer term holders. So this approach really works for all kinds of hold times, for longs, for shorts, and various volatility conditions. That's the great thing, not just, during directional moves. So let me switch back here into the PowerPoint here. And let's talk about the very, very important part here, the risk management. How do you protect your life savings and even turn the next market crash into your own personal ATM machine? And I know that's pretty strong wording, but let me start with a personal story here. So after I sold my telecom company, I was a client at one of the large brokerages and had a team of 3 stockbrokers on the team, and they kept advising me, and they kept me mostly long only, and in a lot of technology stocks, big names, not those hot IPO one-day wonders that you saw during the tech boom, but names like Intel and so on. And then April 15th of 2000 comes, and I had the worst day ever in the market. I lost $1 million in a single day. In a matter of 8 hours, I mean, just calculate what that is per hour. It was devastating. And what that did is I said to myself, I'm never going to go through such a drawdown again. And then I turn on CNBC, and you got those hedge funds guy on there that talk about, wow, the market is great, this volatility, it's putting billions in our pockets. So I was determined, I got to figure out what is happening there, how do they do it, how can I join what they're doing. And then I went to a hedge fund conference. I was still living in Vienna, Austria at that time, and the keynote speaker was supposed to be Myron Scholes. You might recall the name from the Scholes, Black Scholes options price theory. That's the Myron Scholes, and he actually won the Nobel Prize for that, for the options price theory. And he was the keynote speaker there. It was a pretty expensive conference, $3,000 for a day, but I figured, what the heck? I just lost $1 million, so I'm going to go there. And as luck has it, I was able to sit next to him. And still remember to this date, I really felt bad how many questions I asked him over lunch. Poor guy could hardly eat, but I figured, how many times in your life do you have the opportunity to sit next to a Nobel Prize winner and a guy that has made billions of dollars in the capital markets with a firm called Long-Term Capital Management, LTCM, and then he blew it all up and had a great comeback. And the key thing I got out of him, that it's events that trigger all the major moves that cause hurts of investors to buy stocks and the price moves up, or on the reverse, it's events that are bad that trigger those monster moves on the way down. And if you understand what those events are, you got almost the Holy Grail. I mean, as good as it gets. And I was determined with that information to see if I can figure it out. And I didn't have what all the big funds have. I had no Ivy League educated analysts, programmers, data scientists. I also didn't have billions in capital. My account size was still sizable, but in no way, was I comparable from a resource point of view with all those hedge fund guys really had as a resource. I'm pretty good at reverse engineering, and it's the same thing in the telecoms industry. I got the first license, but that wasn't a guarantee to success. I still had to figure out how to deliver phone calls. I never ran a phone company in my life before, but I reverse engineered all the processes, got the right technology, put it in place, and then sold the company within 15 months after starting it. So I was determined, I got to figure this out. I never want to lose $1 million in a single day because after all, 1920s, big panic in the stock crash in the 1920s. 1987, 22.6% drop in a single day. Then the rise and fall of the dot-com bubble. That's the one that really got me. And that big drop there, that's my $1 million drop there. And it was tax day, April 15th of 2000. And then the housing crisis came, and I already had all my data. I knew exactly what I was doing. Was I still a little nervous? Yes. But I had the confidence I'm going to trade through this. I'm going to follow the rules. I knew exactly what kind of events go up, what go down. And it wasn't a straight line down, so it wasn't like I was 100% short all the time. I was pretty diversified, 50% long, 50% short. All those events, that triggered those moves, and volatility was great. It felt like having an ATM machine in my home office. So you might remember from the screenshot I showed you earlier, there's those red or orange triangles, however you want to call that color. And that's short signals. That's bad news events that typically drive a stock down. And they can be pretty impactful, and they can happen pretty quickly. And then you've got those green arrows up here. And those triangles there are the positive news events that typically move a stock up over time. And you see that the historic percent number, that is digging into this database of 12 million historic trades, and you're able to figure out what happened in the past, and history repeats itself over and over and over. And if we enter both long and short positions, it's called being market neutral. If you can predict stocks going up, that's the strong ones, the strong events, positive events. And if you can predict stocks going down, that's the bad news events, those earnings misses and those analyst downgrades and, those privacy scandals and all that stuff, FDA approvals that don't happen. If you can do that, all you got to do is put half of your portfolio buying the stocks that are strong, and then the other half, a good chance that they will crash. And that's being called market neutral, and it's as easy as clicking a button and entering the orders with your preferred broker. So let's say the 6 examples I showed you from today, if you wanted to go long the top 3, you would buy stocks A, B, and C, and then you would sell stocks D and F. That's the top 3 short signals, and you're being market neutral. And then just determine what your hold time is. We provide you all that data as well, and you know exactly when to enter and when to exit. So when long setups go up, you benefit from the up move, and the reverse in case of shorts, as they tank, as they go down in case of bad news, you profit from declining stock prices. So what's the opportunity? You're able to get all the training. So there's 2 paths you can decide to go with. You're convinced by now data is changing the world. Computers crunch numbers more effectively than humans, and it's a 24/7 news cycle that never stops. If you're convinced that this is changing the way the investing world is going to behave in the future, and you saw all those articles, New York Times, Wall Street Journal, Bloomberg. If you believe in that, you have 2 options. Either you do what I did, you buy all the data, you figure it out yourself, or if you want a shortcut, you can get the education and training. We put together a 4 live boot camp session series that goes over everything. You can get instant access to all the recordings. We have a great resource library. We have a monthly Q&A session, and you also have software, the News Analytics dashboard, and there's so many more features in there that we show you once you become a subscriber. That's a predictive platform for news analytics with a dashboard. And you also have a way to set up signals, long and short. You choose. You can have both. And you can even have them pushed to your email inbox or as a text message straight onto your phone. So you don't have to sit in front of the computer as these things happen. So you might be asking yourself, that all sounds great, but I still have a couple concerns here. First one might be, I have no chance as an individual investor or a trader. We give you institutional level tools. It's the same data that hedge funds have been paying us 6 figures to access that data. Don't worry, I'm not going to charge you 6 figures, but it's the same data, just much easier to understand what the hedge funds get. I also showed you that you don't have to be a high-frequency trader to profit. Use Professor Lifnat's approach. You have all months to put together your list of stocks, and you can outperform the S&P over 2 times that way. You might be saying by the time I enter into a trade, it's too late. We talked about how you can turn that into an advantage. By having smaller trade size, you really have an advantage over the big guys. And you need fast computers. It's a big boys club. Well, that's the great thing about software that runs in the cloud, and thanks to the worldwide internet, we got all the fast computers. You access it through a browser. It works on Windows machines. It works on Macs. I'm a Mac user. I use it on Safari. You can use it on Chrome, Internet Explorer. You can also use it on tablets. Then you might be saying the smart money and Wall Street insiders have systems and strategies only available to them, not me. That's exactly how you get access to the same strategies they use. They've been paying us for years, and they keep renewing year after year. You need to have a lot of money to begin with. You can start very small, scale your account, grow it, compound. You might say there are no investments that are crash-proof. I'm going to show you my tax return from 2008, and then you can form your own opinion. And you might be saying, I want an investment that works in all types of markets, up, down, and flat. That's exactly what happens in the news-driven world here. It works in all market conditions. And you might say, I'll be put on the spot to make a fast decision. I don't want to make the wrong one. Completely understand. That's what I felt like as I had this $24,000 wire transfer sitting on my desk. I didn't know, is this approach ever going to work? I had to wire $24,000 to buy historic data. I had no clue if it would turn into a profit, but I just did it, and I'm glad I did. So Use Quantified might be the solution which you might have been looking for. It's an easy three-step process when it comes to trades. I showed you that on the charts. There's a certain news type you're looking for that has a long or short bias, and that's only 3% of all the news that happens today. 97% are filtered out. You know when to enter, when to exit. You can pick your hold time. This is from anywhere from intraday all the way up to 3 months. Now, the juiciest returns are typically in the first 1 to 5 days if you want to turn over your portfolio often. And only available to Wall Street. Now it's available to you as well. Wall Street insiders and the big boys have been privy to this for over 12 years. It was just way too expensive for us retail investors to get in on that. And you can make money with this exact same system today. Absolutely no special degrees, MBAs, PhDs, or security licenses needed. You can do this from your brokerage account if you're international. You want to take advantage of the U.S. Stock market. All you need is a broker that allows you to trade NASDAQ and New York Stock Exchange stocks. This is not a penny stock approach, OTC stuff. This is NASDAQ and New York Stock Exchange listed stocks. Proven system to predict stock movements in up, down, flat markets during all economic conditions. A couple testimonials. We recently had Casey Stubbs from Finance and Markets take a 1-week test drive. He documented all on YouTube videos and posted it. He started with a 100,000 account at the beginning of the week, and on Friday he closed out with a 4.5% profit, $4,507.70 to be exact. Business Wire, which is a Berkshire Hathaway company, one of Warren Buffett's holdings, says News Quantified is an industry-leading innovator measuring news impact on stock market activity. Great, one of the greatest minds in the investing world, has a subsidiary that says such nice things about our company. And then here an example of Tia. She is a dental receptionist in the UK, managing her husband's dental office. Her husband there on the left is the dentist. She lives an hour outside of London. She had no prior experience, never traded U.S. stocks before. She uses a weekly setup, so she gets in once a week, closes out previous week's positions, and she sent us this testimonial here. After just 10 months of investing, I'm up over 55%. Finally have the confidence that we can retire comfortably in a few years' time. This is the best decision I've ever made. And then back to the 100,000 in 30 minutes. That's really when I knew this stuff works. So that was a diversified portfolio, not a single position. So I didn't just get lucky on one single trade, putting a large position size on $103,159.71 to be exact. I was living in Nevada at that time, so Pacific time, as you can see here on the time scale, 6:30 in the morning. That's 9:30 the market open in New York. Put on my positions. Half an hour later, a little after 10 o'clock New York time, over 100,000 in profits. And yeah, I was so excited I took profits. And boy, did that feel better than losing $1 million in a single day. So that gave me all the confidence that this stuff really works. I always get the question, Oliver, that's great, that's a half an hour snapshot, but most people struggled during the 2008 downturn. So I went into my storage unit. I'm a good record keeper. I found my 2008 box with all my records, wiped off some dust, and here's the return. I was running an investment partnership at that time with my old telecom investors and United Data Systems LLC. And as you can see here, that's from Stock Trade Securities with the mark-to-market election here. So active trader status, $1,347,382. Net profit, mainly in a Interactive Brokers account with 2 additional backup brokers. And ladies and gentlemen, this is not from selling software. This is not from doing seminars or doing books or training programs. This is actual profits, tens of thousands of transactions over the years. So $1,347,382 when most investors lost money. In conclusion, you got to ask yourself, about the investment itself and the opportunity. There's this general trend going on. Computers provide better decisions and better data than us humans analyzing it. The key is to make sure that the investment potential for reward always outweighs the risk. And that's what's the great thing is that we dig into this 12 million historic events database and we find the events that keep repeating itself over time. And of course, you got to make sure that the investment itself is the right one for you. And we got a blueprint. If you didn't take notes of the session and you want to get a copy of this blueprint, just type a yes into the chat box and we'll figure out a way to get that delivered to you. It's a beautiful infographic that has all the information in there. And now, if I have permission, I want to share a very special offer. Steve asked me to put together a special offer for his audience, and it consists out of the training, the software, and the signals and the alerts. We also put in a special bonus here. Rob Hoffman recently did a training. He's a 27 times trading champion. He has won 27 international trading competitions, and he's a user of our software. And he shared his favorite indicator setup. Can't be purchased separately, only as part of this package here. You get immediate access to the 4-session boot camp, so you don't have to wait. The next live boot camp will be in September after Labor Day. So if you want to listen to the recordings now and then attend the next live sessions, we also have a monthly Q&A. We also have support through email and through web chat. And the package consists out of the Big Data Investing Bootcamp, $2,997 value. That's the 4 live sessions and access to the recordings. Then the return matrix, that's really powerful that you can find those news types in specific categories that way outperform the base returns of like setups that produce 4 times, 5 times the returns of others. And it's really easy if you can read a table, if you can read a spreadsheet, that's all the skills you need. And we also, as a very special offer, do an 8-month account instead of a 6-month account. So that's normally a $2,376 value. Understand institutions, that's the hedge fund guys, they have to pay 6 figures. So if anybody on here, the hedge fund manager, no, you can't get a special deal. What our retail friends here get. You're going to talk to our institutional guy, Stuart Tollander, and you get access to 2 years of the historic analytics, the $1,990 value. You get the 9 power strategies. That's the 9 most powerful strategies with clear entries, exits, examples. You get that, $997 value. You get Rob Hoffman's number 1 indicator training. So the total value is $11,357. Don't worry, the offer today is not $11,357. Steve negotiated a great package deal here for his audience. And I'm just thinking, if somebody came to me in 2005 and said, for $11,357, you get all of this, You don't have to put $250,000 into developing this all yourself, all the hard work, all the programming, going over the data, going back to the drawing board, figuring things out. I would have paid $11,357 in a heartbeat. Because, you got to ask yourself, what's one successful strategy worth to me? To me, the $11,000 just in 2008 was, seven-figure, 1.3 million in profits. Would one successful strategy be worth $5,000 a month to you, $10,000, or maybe more? Only you can answer that. So the question is, how much would you pay to get access to this one perfect strategy? And you don't have to do all the number crunching yourself. So the special offer here, and there's two components, and if you can share the link in there in the chat, would be great. So we got a $997 single pay option. Normally that's for 6 months, but because Steve negotiated with us, we're going to give you another 2 months for free. Now this offer is available for the next 38 minutes. So you have to make a decision. This is for action takers. You get $11,357 in value on a single pay. Or you can do a 3-pay. If you want a payment plan, you can make 3 payments of $387. Then you don't get the extra 2 months. And after you learned everything and if you used the software, and obviously we want you in a profitable situation that you're able to apply it on your own account, generate profits. If after the initial period is over, you want to stay with the software and get the dashboard, you can do so. $997 every 6 months, or $197 a month if you want to be billed monthly. But you don't have to. You will have the knowledge. But if you want to keep getting the updated data and get all the news sources from a single source, then you can stay and renew. You just got to lock it in before your subscription expires. So the link to order that is newsquantified.com/candle. And CANDLE. So if you could post that in the forum, please, in the Q&A. And you have now 2 choices. Your first option is you do nothing, don't take this leap of faith, and continue on living the exact same life. That is your option 1. And I could have done that when I lost, the $1 million in a single day. I could have not changed anything, maybe switch to a different brokerage, get different financial advisors. But I knew, something got to change fundamentally. And I saw this trend that computers are getting more powerful, and data is available that wasn't before. And I kept asking my stockbrokers what happens in this situation, and he didn't have the right answers. So I opted for option number 2. I ponied up the small investment. In my case, it was almost $250,000. For you, it's not either $997 today or just $387 today on the 3-pay. And you don't have to, pony up hundreds of thousands of dollars to get started. So the choice is yours. Again, 2 options: $997 today or the $387 3-pay option. So with that being said, let me jump back here into the questions here, and I'm going to post the link. If it's not, it's right in here, newsquantified.com/candle. So let's go over the questions, and just need to, I don't think you see my screen anymore. And we got a bunch of yeses here. Ed says he wants the blueprint. Kate A. Jr., we're going to get the blueprint to you. Quantify given a value or assigned a value or dividend into a value group. So Ray, that's a great question here. So what that means is we are using a rule-based approach here. And the rule-based approach defines exactly what kind of event gets us in and when does it get us out. So that's our definition here under various market conditions here. So all you got to do is understand what kind of news event, and then take one of the power strategies and decide how you want to get in. And I see we just had DRMTERRY join us. Just got the sign up here. That's exciting. Welcome. Great to see you on board here. So again, the link newsquantify.com/candle. And if you trade options, I've gotten this. The question here is, can it be used to trade options? And yes. This is not an options training. Just want to be straightforward here. You're able to, if you know how to buy calls and buy puts, you're able to utilize options if you're interested in leverage. We do go over various forms of leverage during the training. There's also something called portfolio margin, which is a great way to spice up your returns and still trade stocks instead of going the options route. So the choice is really yours, how you want to do that. Now, when it comes to returns, typically the higher the volatility, the higher the return. So there's a direct correlation. The highest returns I ever saw was during the 2008 downturn on those monster days. It wasn't just down day after down day. You also had some big up moves in between, and during those days, stocks bounced back, and of course, there was news events that took advantage of that, and then you had another drop, and then the downside started to benefit more from that, and on very, very big general direction days, where everything goes up, the broader market, what typically happens on those days is your long positions will way outperform the general market, and obviously, the short positions are going to have some, either smaller returns or losses. But the great thing is, you're able to still on a total P&L way profit greatly from it. And it's just if the market goes sideways, there's always positive news events, there's always negative news events. You're able to, on a typical day, you have anywhere from 15 to 30 long positions, and about the same on the short side, except if it's a half day in between holidays, then you have lesser of a news frequency here. And let me just share the screen here if anybody wants to see how the checkout page. So just so you know, you're in the right page. Let me go back here to the to my browser and just show you here how the checkout page newsquantified.com/candle is the special group deal here. So we see we have 29 minutes and 47 seconds now for the special offer. What's going to happen once the countdown timer goes to 0? The extra 2 months will go away. That's a 33% savings. So if you want the extra 33% before the timer expires, make sure to put in your order. Start out with your full name and the email address and phone number. Then go to step 2. It'll ask you for the credit card info. And it's MasterCard, Visa, American Express, and Diners, and I think Discover. I'll just put in the number here, and it'll get you straight an activation email. You get instant access to your account, and you can get started right away. And then you have instant access to the bootcamp recordings. You can also see the academic study if you want to read through that. It's in the member section in there. And so no wait, you get it instantly. Just make sure you check your spam folder if our email address isn't in your system yet. And You get instant access, and so $9.97 today includes 8 months of access if you get it before the timer expires, and if you want the payment plan, $3.87. Great way, it's a great rule-based approach where you know exactly what to do, when to do, and anything from intraday to position trading up to 3 months of hold times is the perfect way to profit from news-driven setups. With that being said, so I've got 27 minutes left here. Steve, again, wanted to thank you so much for hosting this today. It was really great interacting with your audience. I want to thank everybody on here today. Hope you learned something, how the data-driven world is changing for investors, and hope you will, no matter if you decide to take us up on our offer or do it on your own, you should have a data-driven approach to in your own trading. And so thanks again, everybody. Wish you a great rest of your evening, and hopefully see you on the inside. Thanks so much. Bye-bye.